We have absolutely nothing to worry about. Momo stocks, for the most part, are crashing. But the money is coming out of those and it's going into, yeah, you guessed it, mega cap tech. This market, at least the S&Ps, refuse to go down as long as the big boys are strong. The question of the day, does the Beyond Meat burger and hot dog taste any better than it does before? Who cares? Up 75%. Netflix, not a great earnings report, but we'll talk about that with Alicia Reese, Wedbush Securities. She will talk about that earnings reports and some other stocks in that sector. I'm fired up. Dennis is fired up. Brent's always fired up. It's a Wednesday on PreMarket Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, we're down 5 handles, 67, 68, 50, way off the high. Last night we got up to the high of the recent high of the move, but pulling back. Nvidia flat after a rough couple days. Why'd I throw Nvidia in there? The dollar is up 15 cents at 98.68. TLT still climbing up 29 cents, 92.29. Crude trying to get off the map, up $1.20 at 69.16. GLD, the pain continues in the gold trade, down $6, 371. SLV got near 50, now down 45 cents, 43.34 in Bitcoin futures, under pressure once again. Bitcoin down $4,400, still holding the recent low of the move. Let's bring in Triple D here. Triple D, I know what you're going to say about this market.
I know what I'm going to say is you got the title of this show wrong. John LaGrisley just got the title right. You need to change it right now. Change it right now. John, that is awesome. Beyond Belief. BYNDBELIEF. Can you change the title? Because John, that was a good one. Beyond Belief. He's changing it right now. Brentster will change it to BYND Belief. Thank you, John. That is a great title.
There you go.
It is. It is Beyond Belief. This is the show for today because you are seeing a crazy short squeeze in Beyond Meat. And it is nuts. And we know what's going to happen and probably already, that they're going to drop an offering here eventually. But, right now, who cares? The stock's going higher, ripping higher. This is this market. It is so selective. Like, we're now at a point where a lot of Momo names have crashed. We'll go through those today. We're at a point where the market S&P holds up because Flight and Mega Cap Tech will just hold the market up. And then we're at a point where there's just little mini short squeezes happening there. But Beyond Belief, wow, big move. Great title, John.
Richard Judge said Beyond Real, but I like the Beyond Belief. I like
the Beyond Belief too. That was a good one. As soon as I saw it, I was like,
John.
We need a better one. Beyond Ace, beyond everything, just beyond. Wow.
You want me to do technicals and Beyond
Is that other
Belief?
stock? What's that?
Do you want technicals, or you just want to talk about?
Yeah. So there's no reason or rhyme or reason. It's a GME all over again. The stock's going bankrupt, and these memesters get behind it, and they can't stop. It's already traded 380 million shares. This is like 5 times the volume that it was at yesterday. Because remember, it was like 80 million. I was like, it's already traded 80 million today. It's traded 380 million today. Crazy move. Crazy move. I mean, we don't know where the pony ride ends, but we know how these things go. And right now, momentum is in this thing. But it was wild even last night. Like, we were trading it. We were looking for other short squeeze stocks last night, which we'll get to a few of those here today as well. Beyond Insanity. Look at all these. These titles are good. Yeah, we got to start having the chat name the show. That's what we're going to start doing. Chat names the show. Brentster, come on in here. We got to say good morning to the Brentster. We were working last night, digging up short squeeze names. I want to give me your best short squeeze name right now. Chat, just type in the ticker symbol. We're curious of the best short squeeze names because there's a few going. So there's Beyond Meat, We can get to technicals on in a second. There's a few other ones going here today, though. Yeah. Donut, DNUT. My buddy Sarhad was pointing this one out yesterday. Good call on Twitter. Donut is up 22%, DNUT. We also have, just, moving this morning, Flowers. Flowers.com, back from the dead, FLWS, up 22% as well. So you're getting a few little short squeeze movers. And there's lots of other ones not moving at all. So it's very selective. But if you've got a good one, let us know. We want to hear about it. Lots not moving. GameStop, AMC not participating. But Slavadabadoo's got a whole list of them there for you as well. But there's only a few of them moving here today. Does it spread? We talked about the possibility of the short squeeze spreading yesterday. It did do a couple stocks, but it's still just, in little pockets. It's a little pockets of this. And then the overall market is like the most, ridiculous market ever, because you're seeing the S&Ps just, refuse to go down. And then you're seeing all these Momo names just continue to collapse. Peloton.
Pretty good one.
Peloton.
Pretty good one.
PTOX.
I'm adding that to the list.
I'm adding it to the list right now, too. PTOX. I didn't even think about it. Joel, you should have been all over Peloton.
Been out of Peloton for a long time. We've already discussed it. PLTE, Children's Place, up 18.
PLTE. We were trading that one a little bit last night. Yeah. So the question is, these are all, you don't want to invest in any of this stuff. But the question is there trades in some of this stuff? Well, apparently so. You see Beyond Meat go from 50 cents to $7. What is that, like a 1,200% gain in like 2 days, 3 days? So there is some money to be made if you time these things right.
They do have news, though. They do have news.
I took a little position, a little speculative trade in GoPro as well. Mike was giving us that one last night. There's lots of these little things. Yeah, keep giving them to us, chat. We're curious what you got out there. What do you got? What is your short squeeze stocks? Because it's kind of short squeeze day, even though the majority of stocks are going down. Silence comes, a hush comes over the crowd.
Yeah, we're just trying to.
I like that, Dennis. So
everybody says I need to talk less. Then I'll talk, and nobody talks. Not you guys.
I'm going to
shut up for a second. Give me some technicals on whatever the hell you want.
I'm going to let Brent go because technicals are so hard on this stuff.
You don't want to talk. You don't want to give me a Beyond Meat. Give me a level on BYND. Give me, where did it get to last night? Because this one was the catalyst for all of it. Where did this get to last night?
886.
Almost $10. But it's 646. So it's officially in a bear market here, folks. That's the funny thing. So actually, it's more than 20% off the highs. So it's actually officially in a bear market. It doesn't look like no bear market to me. Plug Power. Some of these problems, so let's go and define. So some of these names that you guys are giving me are also Momo names that have already kind of gone. And the Momo names, unlike the short squeeze names, are coming right off. Like a Plug Power was a Momo name that is now broken. So that doesn't look nearly as good as some of these other ones that haven't, really went yet. We just want to do, let's take you through the Momo stocks here just for a second. Like, the retail darlings that you just got to get in these things because they're going and going and going and they're going to go to the moon. I mean, let's start with just a few of these. CRML. This was one that they were talking, critical metals. They were talking about this one 2 weeks ago. Went from $5 to $32 last week. Yeah, $32 this thing hit last week. It is now 14. There's a nice little 60% haircut in 6 days. Let's go on. Let's look at a few other ones here. TMQ, these metal stocks. TMQ, blast from $2 to $11, and now it's back at $5. These things are fun. Let's go to another one. Let's go to ERCAT. That one goes from $10 to $16 and back to 10. And you got like USAR, all these metals, these rare earths. This one's really hit. But you can even get off the rare earths, and you can go in like the quantum stocks. IONQ from $40 to $84 and back to $58. Are these pullbacks to buy, Mr. Elconin? Is the momentum going to come back in, or are these completely broken? I'm going in the secondary camp that these things are now broken.
Well, if you go from the overhead supply standpoint, there's a lot of overhead supply here. And so these rallies are going to be met with sellers.
Yep.
Going to be met with sellers that are people that are holding the bag if they ever decide to sell. But then there's also people that just are holding on and are buying these dips, standard D, like, okay, this is way overdone. They're buying a position. I'll use something like like Aklo here. Aklo, they're just building, and they need to be building more today because it's making a new low of the move. But eventually they get an average price. There's a pop. They take out. They don't care if this ever goes back to 185 or whatever the all-time high is. But I want to bring up a stock that if you talk about cleaning house in the PR department, it has to be Cleveland Cliffs. Could they have picked a worse time to become a rare mental health company?
Wow, that's a great call, Joel. I don't think they could have picked a worse time.
They officially, so this was when I was away, the one day I missed. So they officially declared themselves a rare earth company?
Yeah, they did. Like one of the big executive comments in the earnings press release was like, it was basically like, Trump, we're open to this. Come talk to us, shake our hand. We should be participating in this. We're going to be participating in this.
Wow.
You're so right, Joel. That's a really good call.
Wow. That is the worst timing ever because the rare earth bubble burst, and then the next day they decide they're going to be a rare earth company. And now they're getting punished like a rare earth company, even though it's a steel company. It's a steel stock. Yeah, bad timing 101. You're right. That might be one of the worst timings to do that ever. They would have did that a week ago, the thing would be at $20. But no, they did it in the worst timing when the rare earth mineral stocks are just getting hammered. Yikes.
Yep, MP Materials. I mean, these things are still going down. I mean, look at maybe the 50. I mean, the 50-day moving average.
On
if you
some
want
of
to,
these, maybe.
Yeah, I mean, MP.
You know which one? So, and again, I would say I think you need to separate the ones that actually have businesses and revenue starting or revenue coming in, and the ones that are just hopes and dreams and probably never getting a contract. Like, look at Nebius, NBIS. This one's interesting because it's getting punished like the other Momos, but we only got a $19 billion contract from Microsoft. So you just went from 140 to $100. That's one that's interesting. $100. I like that one better than the other one. So I actually like NBIS at $100 here. So I don't think it's down. Like stay away from them all. Just be selective. Do a little homework. Find the ones that actually have real revenue coming in here, because we do get to this point when the bubble bursts and it's all about story and revenue doesn't matter. But you know when it does matter? When the momentum is gone. Well, the momentum is gone now in most of these names. So most of these names have no valuation support whatsoever. But some of them may get valuation support. So if you have real contracts coming in, just maybe there is some opportunities to buy the dip on some of these names. That's where I'm at.
Dennis, do your Momo and your value traders. Do your little
yeah.
little
so stick. And I've done this, for years in the show. I've been listening. You're going to hear this, so you don't have to listen again, or you can repeat. So basically, valuation doesn't matter at all when the momentum traders got it. It doesn't matter. It's meaningless. Like people who try to short stocks that are just momentum traders got them lose money like crazy because it's meaningless when there's a hot, sexy story. There's too much momentum going. Once momentum breaks, all these stocks that we just mentioned, now the momentum has broken. Then valuation does matter because Momo traders are like, no, I'm not buying that thing because there's no momentum in it. And the value traders are like, are you nuts? I'm not paying 100 times sales for a company. So then there's no buyers. It's like a buyer's strike. And that's why these stocks fall 30, 40, 50, 60% in 6 days. Because momentum traders are saying, see ya. And the value traders were never there. So there's no buyers. That's what happens. So there's this gap that I always talk about. The gap starts. So you get the run up with the momentum traders. Momentum breaks. Momentum traders are getting out. Now you have a gap because value traders are like, hey, we're way down here and you guys are way up here. That's the gap that eventually usually fills over the course of time. So now you actually got to put your CFA cap on and say which of these companies are actually revenue generating or getting big contracts or have the potential to grow into these obscene moves. I think Nebius is one of them. So NBIS is something I would look at $100. General Motors is like you've got that up there right now.
I'm sorry, someone asked about that. I'm
so
sorry.
Joel just goes on his own tangents in his head here right now. But General Motors is a
Thanks,
value
Brent.
stock, nothing to do with
Throwing
this
me under the
conversation
bus. I
whatsoever.
got some
But
tracks.
it's a conversation we're going to, because value stocks are all of a sudden a little bit more sexy again. So if you want to go there, we can. So we just gave that conversation. I think put your CFA cap on. Some of these Momo names could actually turn into value trades. So dig deep, look at the contracts, look at the potential for revenue, and say, well, there is a $19 billion contract at Nebius, so this is not a zero. They actually have real revenue coming in. So I think that's what you got to do, is look, through that. But if you've got, just hopes and dreams and no revenue and no contracts at all, those stocks probably aren't the best to be looking at the dip on. I'd look more to the other names. Now, you were going to General Motors, and this is a good segue here, because value got hot. There is a reason that the S&P is not hammered when all these momentum names are going down. One, most of them are not in the S&P because most of them don't make money. You have to make money to be in the S&P. But two is the S&P value is all of a sudden hot again because all those momentum traders got crushed. You won't see any of that on Twitter. None of them will talk about their losses. None of them. None. They don't talk. They don't lose on Twitter. But in reality, they do. They just don't tweet when they're losing. So if you saw it quiet in all these Momo names it wasn't they all got out. They all still held. They just don't talk about it now. So, but what they are moving into, and what this market is moving into, is a little bit more value-oriented names. General Motors, the value stock of all value stocks. Yep. I said when I was back at 50 that if I was General Motors, I would take the company private because it's trading 6 times earnings with a nice dividend to boot. Well, now all of a sudden, people like earnings. People like value. Really? They can't stop buying General Motors yesterday because they're getting crushed in all these companies that don't have a hope in hell. And there's a real company out there that's been making real money and raising real guidance. General Motors. Perfect day for GM to report in a value-oriented market. If General Motors would have reported this a month ago, they're like, I'm not buying General Motors. They would have gave it back. But it doesn't give it back because it reported on the perfect day.
Okay, someone asked for some technicals on this one, and my first gut is, wow, it's not giving anything back, right? After that historical move, I think Jay put in there. I mean, to me, it's the biggest move I can ever remember. I will just give you on the upside that old-time high back in January 22 was 67.21. Yesterday, you exceeded that. You went to 67.55. So in your trading green, so you have a potential capital P double top on a monthly, kind of like SLV, but you even have to go way farther back than that. So what I'm looking for is, are the sellers still going to be here in the 67 handle? Or is it just going to, it's just going to be Momo, 67 and a half, 68, 68 and a half. I think it's going to start to thicken up. Once you get, a psychological number like 70, I think it's gonna thicken up. But more importantly than focusing on the highs, look for the closes. See if we can still make another all-time closing high today. And then you're gonna need some good volume. You had good volume yesterday to take it up at that elevated level, 43 million. The only thing I would get a little concerned is if it just starts to, consolidate here for a few days, and then the volume starts to dry up. That's not going to happen today or the next couple of days. So let's get some consolidation here. And for right now, the most important number is that mark from yesterday at 66.62.
I think it's always hard to chase stocks. So I think when I'm just talking, and I'm not thinking, I'm just talking out loud here, is when you get a move like $10 General Motors, there's almost usually some profit taking in there somewhere. So it's not usually something you have to chase. You hate it at 50, you love it at 67, kind of doing it backwards too. With that being said, if value trades come back into favor, this could continue. I mean, it's not just General Motors, folks. Somebody just pointed out Target. Target's getting a little bit of love. Well, Target trades with a P of like 9. So all of a sudden, they like low PE names. Low PE is cool again. And this is what we do. We rotate. We like growth. We hate low PE. We hate that you make so much money. We sell you. Then we move into like, no, we like you now because you make so much money, because this is what the market does. It just rotates back and forth, like a pendulum. Value, growth, value, growth. It's going to be stuck on momentum for a long time. But now we're back to value. So if your stock's got a low PE, it's cool again right now. Does that change tomorrow? Who knows? But right now, low PE is cool. Go dig up some low PEs. Give me your low PE names. So I want your short squeeze names. I want your low PE names. Stocks have just been crushed, ignored, hated for a long time. They're starting to show some life, like Lululemon. Oh, hey, 16. Used to trade 45 times. It was a growth to value name. Now all of a sudden they start to like it because low PE is cool again. So last 2 days, Lululemon 162 to 182. Dig them up, folks. This is the themes that we look for early in the morning to try to give you an edge.
Yeah, Lulu had a nice name. Those some of your steel stocks traded lower PEs too. Look at Steel Dynamics making a new all-time high yesterday. Nike, does that traded Nike skimming near the bottom of the chart here? But the thing, how long will this last, right? How is this a
That's
day?
always the question.
Yep.
Correct.
Yep.
And in this market is so full of momentum traders. And so, but these things need to get momentum, because then the momentum traders will come into those value names. There are pockets that last a long time. The longest value market in my history of trading, that from when I was trading, was from the year 2000 till 2007. That was a value market. That was when Berkshire was on fire, because they hated them from 96 to 2001, because all the momentum names had all the cool. Buffett doesn't invest in these internet stocks. He's missing the boat. Who cares? These companies trade 200 times earnings. It doesnn't matter. Or they have no earnings at all. It doesn't matter at all. It mattered after the tech bubble burst. It mattered then. And that value market lasted 7 years. I'm not saying this is going to last 7 years. It's been going on for like 7 days. So nobody's got a crystal ball. Maybe they all come back in those momentum names, and by the end of the year, we've forgotten this entire conversation. That is very possible. But we have to always have the possibility that, hey, maybe Oklo just set its highs for the year. Maybe CRML just set its highs for the year. Maybe it set its all-time highs. Stocks go from 5 to 30, though. Lesson to be learned. When stocks go from 5 to 30 in 7 days, you sell, because there's stupid people buying it now. That's what you need to learn from this. You got to sell. It's one thing to have the paper profits. It's another thing to actually ring the register. So when your stocks go up 500% in 5 days, you sell it.
And don't have regrets, because you are never, ever, ever going to get the top in these things.
Never.
And
Never.
in one strategy that because Dennis is a little bit more active in his portfolio and stuff, and I talked to him, and I'm like, well, why don't you wait to get taken out on the downside? But the trader blooded. Now he wants to sell into that strength. So
I think you got to sell your peanut. Harlan Pyan. Harlan, where are you, Harlan?
I'm trying, Harlan. Does anybody know?
We can't find Harlan
here.
Pyan.
Does anybody know Harlan Pyan in the chat?
Because he was one of our first guests. He was one of our first regulars on Pre-Market Prep when we started way back in 2013. And he's gone. But his saying applies so much. Sell your peanuts while the circus is in town. Sorry, folks. Most of these momentum names, the circus left town. You messed out. Sell your peanuts while there's circus in town. You may not get the top, but you got a big move. Take the money and run.
The Eagles, right? I know. We got to have a soundtrack here, and then we can get fined by
YouTube's all over us. I just say that, and they're probably going to fine me for that. You said take the money and run. You can't say take the money and run. That's trademark Steve Miller.
Yeah, we get those all the time, even in the STN room. I mean, man, there's like little YouTubers out there lurking. But
the circus has left town. Nabs, it did. The circus left town. It didn't leave on the S&P, and we can get to why. It's Apple. It's the mega cap 7. Because what do they do when your stocks, and look, it isn't like the mega cap 7's been on fire for the last, look at Microsoft the last 2 months. Bring up the chart. Nothing. Down. Q's going on fire, because all these little momentum names, they small little pieces, but they were going up hundreds of percent, so they actually made a difference. Well, now you get a little move in mega cap 7, and it makes a big difference in the indexes. So Microsoft, Meta, Amazon, Apple. Apple's been a little bit more on fire lately. But the market is now flying back into names that they feel safe in. Their market is flying into, well, Google too. Google's been going up, but Google had, the bad news, good news. We can get to that in a second too. We're just trying to lay out the whole theme here, though. It's rotation station still. It's rotating from those momentum names. This is what's happened the last 5 days into the safety of the Magnificent Seven. That's what they see as safe. Now, Netflix, we'll leave out the grade 8 because Netflix obviously not that safe, which brings us to our first earnings report of the day, 25 minutes into the show into earnings season. NFLX, Mr. Brentster's in the background. He's going to give us those earnings from Netflix here. He's digging it up, but it's down 92 points. Expect to move is 90. Man, these market makers are good. They are good, man. 90 points right there. Consolidates and stops at the expected move. Brentster, how did they do?
They didn't do so good for the quarter. They missed for the quarter. 587 estimate was up around $7. I tried to see if there were some adjustments in there. I didn't really see that. So that looked like the comparable number. Sales right in line, maybe a little worse than expected. 11.5 billion, excuse me. They narrowed their 2025 sales guidance just a touch. New range is around 45 billion. That's also right in line. And for next quarter, Q4, they are expecting 11.96 billion. That was kind of your rosiest outlook. Analysts were around 11.9 billion for Netflix Q4.
The stock's PE is too high. It matters all of a sudden again. It really is. I mean, and the earnings, there. So it's tough. Now, the expected move 90 points down 90. It's about right. It is like, a little lower beta stock, which is funny to say about a high PE stock like Netflix. But I mean, I bought this in my long-term account back when the stock was, I think actually I got near the lows. Like I bought it once at like 300 with Ackman, and then Ackman bailed, and I'm buying from Ackman. And I bought more at 180, so never found average down. I think I got my cost basis down to like 220. The thing went to like 400, and I was like the next year, and I was like, man, I made like 75% of my money in like a year and a half. Like that's pretty darn good. Sold it at like just under 400, I think like 390. It's $1,200. Welcome to the bull market where you always sell too soon. So I sold my peanuts while the circus was in town. The problem was it was the first act. That was the problem. So I sold way too soon. But now, at $1,241, Netflix all of a sudden is no longer, a value trade. It was 17 times earnings back at 200. And I was like, how the hell do you go wrong with Netflix, which is still growing like crazy at 17 times earnings? You don't. You just buy it, you close your eyes, and eventually it comes back around. Now it's trading 52 times earnings. And that's a bit of a different story. That's, a horse of a different color.
Not a horse with no name. The expected move.
You're getting fined for that too.
Do you know who that? You know who's saying that? Brentster will know.
Brentster knows. A DJ. Brentster knows. Dun, 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 on a horse with
on
no
the desert
name.
with a horse with no
La,
name.
la, 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 la. Now we're getting fined for sure. I don't know. Neil Young?
Nope.
Sounds like
Is it
Neil
America? I was guessing America.
I guess
I think it's America.
America. They're saying America. Mike says, Mike Franz, he's all over everything. The Chai's all over everything in the STN room. He's on it. CM, Caton, good job, America. Okay. I know it's Neil Young, but okay, I learned something today.
So I want to talk about the expected move and what happens when you exceed the expected move. The expected move is $90. We're down $95. So now that expected move is probably closer to 1151 is a huge level. Yes. And right now it is acting as resistance. I mean, $5 and Netflix is absolutely nothing. But once the expected move is exceeded, option guys are scrambling.
Yes.
And they're scrambling. And they're having to sell stock, right? To offset.
This is a great segue and a preview into a show that we have coming today. Joel, this is a good setup here. We have a new show, public show, coming out 1:30 today. So subscribe to PreMarket Prep because we have a new show coming on, and it is options unchained with CC Legator. And we will ask
Woo!
you that question. What happens when the expected move is exceeded? Write that one down. Brentster is going to be hosting with CC Legator at 1:30 p.m. today. Options unchained. Do you want to show what we want to show the intro of it?
Yeah.
Show it right now.
Intro,
Watch
right.
this.
and then
This
I
is
think
going to
Brent.
be,
Yep.
yeah, Brentster's got it. He's
Every
fine.
Wednesday. Here we go.
Stock Trader
How's
Network
that?
bringing you another new free show because you guys have been asking for more free content here, and we're going to give you more free content. 1:30 Eastern every Wednesday with CC Legator. If you want to see him more, he's also in the SDN room as well. But free for you today, 1:30. Join us because this guy knows options better than anyone. I learned so much from CC Legator. When he comes on, I just sit back and listen because you can just absorb so much information. So jump in 1:30. We will be with CC Legator, and we'll ask him that question. What happens when the move is exceeded? Write that one down.
All
Back
right.
to our regularly scheduled programming of earnings. So we did Netflix. Texas Instruments, we're running out of time. It's down 13. We really shouldn't just gloss over Texas Instruments because the entire chip sector is getting hit on it to a certain extent here, but we might just gloss over it here because I'm short on time. And we're going to have our guest coming on in the background here very shortly, which is Alicia Reese. You want to do
go to
Texas?
her right now. We can.
Oh,
we
you
can
go.
have
Let's
the,
go to Alicia right
we
now.
can have
Let's
the
do it. She's
Netflix
ready.
talk. Here we go.
Organized today. All right, we are joined by Alicia Reese. She is Senior VP of Equity Research at Wedbush Securities, joining us here on PreMarket Prep. And a nice, calm, soothing voice here with all us excited, crazy, whatever we are. Alicia, how you doing today?
Doing well, thanks, Jill. How are you?
We're doing good. We're doing
Good.
good. So I think we got to start with the big dog here. Netflix, under pressure, exceeding the expected move. Taught us, and I didn't bring this up. I didn't get a chance to, but aren't they blaming like this margin decline or whatever, and like some Brazilian tax situation?
Yep.
So clarify that for us,
Sure
please.
thing. Yeah. So in 2022, there was this Brazilian tax that came up. There was some legislation that made Netflix and everyone else in the space believe that they wouldn't have to pay it. More recent events have led them to believe that they will have to pay it. This isn't a typical tax, so it's not in the tax line. It's in margin. So in the third quarter, they had to take the expense, book the expense for all quarters since 2022. So the total operating margin impact to that was, over 300 basis points. Going forward, though, if you kind of extrapolate out what they said and the impact that they had, it's only about 20 basis points annually to be expected, which is, just a rounding error for them. It's not a big deal. The the impact to the quarter certainly didn't help, though. It optically was very damaging. But I don't think that's primarily why the stock's trading down. I think revenue was underwhelming overall against our model. All the regional markets did really well, did better than our expectations. Domestic, though, the UCAN region didn't do quite as well as we had hoped, or at least estimated based on some, survey data that we have seen. And also just, for the simple fact that, like, look, K-pop Demon Hunters was a massive hit in the quarter. That was the most watched movie of all time on the service, and it was, a huge hit globally. So what's the delta there with the soft revenue? And it's not soft; it's still huge growth. It's Netflix, so the expectations are incredibly high. I mean, it was really. I think the delta is they're not delivering enough ads. Now they're getting CPMs seem to be really leveling off now. And they don't report this. This is all data that we're collecting outside. But CPMs seem to be leveling off, and I think they're going to rise again in the fourth quarter and through next year. I think they're going to see some accretion on that. But in the third quarter, they're just not delivering enough ads per hour. The ad delivery rates are incredibly low, much lower than anyone else. So that's impacting as people are increasingly on the ad tier. Now, our survey data is saying that people are going to go back to premium tier in the fourth quarter because there's so much good content. There's the NFL games. You have a lot of people, our survey data is saying a lot of people coming onto the service who've never actually used it before, which is very unusual. So I think, there are some positive signs for the fourth quarter and for 2026, but the lackluster report and the lackluster guidance relative to expectations, certainly hit the stock.
Tariff proof or non-tariff proof?
Yeah, absolutely. Advertisers care so much about how to reach the customers they want to reach, and nobody has the depth and breadth that Netflix has. And because because they have that kind of reach and they're getting so much better at targeting, and they're going to invest quite a bit in that over the next year, I think, CPMs are going to only go higher, especially because they're still not delivering too many ads to the people on the service. I think they're fine. I think they're insulated. The content tariffs, the Hollywood tariffs that Trump is threatening, I still don't see how that even gets implemented. It's just such a tough situation. I think tax incentives, like the ones Newsom just introduced in Hollywood, will help more.
Alicia, Netflix has always been good at like shifting, narratives and
Yes.
coming up with new catalysts for the stock, and maybe they're at that point where they need a new catalyst, and
Yeah.
um, it's been mentioned that perhaps moving more into gaming would be something. I mean, they have the audience, right? They have the people. What about it? Could that be the next catalyst for Netflix?
I mean, it could be, but I don't think that's it. I think the next catalyst is really buried within the commentary on the third quarter earnings call. They said the key priorities for advertising in Q4 in 2026 were just to increase the DSPs and to increase their in-house targeting capabilities, but importantly, iterating on ad formats, including ad interactivity. Now, that's really important because that gives the consumer the ability to click through, interact, and also on the gaming side, you see, they want people to be able to use their cell phone to, interact with the games, to play games. Now, they could use controllers, but having your cell phone out while you're watching Netflix, whether it's a TV show or playing a game, gives you the opportunity to click through and buy. So that full funnel advertising opportunity is huge for them in 2026. That's a huge catalyst that I don't think is well understood or well appreciated. Now in 2027, what they said was they plan to pivot towards machine learning based optimization, advanced measurement, and advanced targeting. That means performance marketing. Now, if you listen to what AppLovin has said, in the next year or two, they intend to go towards connected TV once they've kind of mastered e-commerce. The combination, the partnership between AppLovin and Netflix would be massive. Being able to do performance marketing on the scale that Netflix has and with the data that Netflix can leverage at that point would be a massive catalyst, in my opinion.
Alicia, let's move on to a couple other stocks that you cover. AppLovin is one that has, had a lot of love, a lot of hate. We've had a couple short sellers trying to beat on it, in the middle of the summer. The stock has rallied back substantially, got added to the S&P. Now it's been selling off here with the momentum sell-off in the last, week or two here.
Yep.
Thoughts on AppLovin APP?
Yeah, I mean, they have a lot to prove with this international rollout, with the e-commerce rollout. They have, obviously some, heavy scrutiny on them right now. So they're going to have to prove that that scrutiny is not well founded, which is going to take time, I think. And as they roll out the e-commerce opportunity, if they do that well, which I think they're very well positioned to do, that stock should keep rising. And the margins that they're able to produce at this level are just simply staggering. And I think it's not a very well understood space. And so the more people understand it over time, the sky's the limit for this, especially like I said, as it continues to partner, in e-commerce and then expand into connected TV. Connected TV is really the gold mine at the end of the rainbow that they're trying to get to, and that looks to me like a 2027 event.
Also, another stock that's just been having an unbelievable year just quietly is Roblox,
Yeah.
RBLX. And this stock has went from starting the year at $60 to
Yep.
133. Resilient too, not even selling off with the recent weakness that we saw in some of the momentum names. I guess, there's some value here too, though. Talk about RBLX.
Yeah. This is something pretty close to home. I play it with my kid. A
Oh,
lot of
nice.
people do, I think. I think it's really interesting because they've seen a real flywheel effect with a lot of the games. They had, Grow a Garden, very, peaceful, fun game to play. But it was incredible how many people really got on there and played. And this spanned, ages and different characteristics, and so they're able to really expand their user base quite a bit. And then it moves on. You have the younger kids going to all the steal a brain rot and all that sort of stuff, and there's just this massive flywheel effect that is driving more and more engagement. And around any sort of holiday or birthday, you have just massive, all the kids want are Robux, and so they go and they spend all their money on that, and they don't want regular gifts anymore. uh, you know the developer incentives that they're putting into the platform, the infrastructure improvements, all of the input that they're putting in is really going to layer in significant growth, I think. The most important piece is that they're giving the developers tools to create more AI, Gen AI. So they're giving the user then the ability to create the scenario that they want to play. So it's not a stock game. You get to say, oh, well, I want to play with, a banana gun as one, example they used at RDC. It just makes it more interesting. It makes it, this brand new, platform experience that you can't really get anywhere else. And I think that's gonna drive a lot more usage, and it's gonna become eventually its own, platform that everyone wants to go to. A lot of different games, established games. And that's where it gets even more interesting, and that's why I think the stock continues to rise.
It's hard to ignore the news with the criminal subpoenas
Yep.
regarding Roblox here. I mean, those things are so hard to navigate. It definitely has a short-term impact on the stock when that hits the
Yep.
tape, but tell us about perhaps the longer-term impact.
Yeah, they're doing a lot of work there. And I would say, specifically as a parent, you don't want there should be zero tolerance. And I do think there is there. If you compare it to the likes of, any social media, they're far and away a safer place. And frankly, most of the predators will have to peel people off to the likes of Discord to actually, commit any crimes. And so I think there are a lot of good safeguards on Roblox, but I do think they're going to continue to add more and more over time until, they get to that zero tolerance place. What I think is important is that they always address these issues head on. They don't skirt away from them, they don't shy away from the conversation, and they tell you exactly what they're doing and what they plan to do in the near term to address these issues. So, for parents, that's important. As somebody who plays myself with my child, I haven't seen anything that was concerning so far. And it's really easy as a parent to implement any guardrails that you'd like on the service. So I think the loudest voices on this tend to be parents who've never let their kids play and will never let their kids play. So I don't think it impacts numbers. And for
Hmm.
those that do play or understand how to set up those guardrails,
Yeah, and another
they
thing
know that they're working.
that I've read about is that they actually lure people off the platform to
Yes,
go
that's the
to
that's the concern.
Yeah, to go the other things. So let's talk about a stock that people love to talk about, Fubo. Fubo TV. I mean, I don't know if you're following what's going on in the prediction markets and Kelce and sports betting. I mean, it is just taken off. Where's Fubo? Where's Fubo fit into this whole mania of sports wagering?
They got out of the sports wagering. They got out of that last year. They completely skipped out because they didn't have the money to invest. They just didn't have it. They were running out of cash too quickly. So I think they were really disappointed in that they had to divest from sports wagering. But they really had to focus on the core market at the time, conserve money, get rid of a number of content deals that they simply couldn't afford. And they couldn't raise prices with the competition from YouTube Live TV and Hulu Live TV. It was just too competitive, too difficult. So they had to divest from that. Sports wagering, yeah, that's a fantastic
So what's
market.
what's the
Just Fubo
catalyst for
doesn't.
this stock?
Because they're going to merge with Hulu
Oh,
Live
that's right.
TV, and that will give them an opportunity combined to compete effectively with YouTube.
Okay. All right. So
And I think
Fubo
that
here.
looks likely to go through. So
Yeah,
I think that's what's going on there.
with Disney, right? Disney and
Yep.
Hulu, right? Okay. All right. Well, moving on. Let's talk about some of the cinema, some of the theater stocks, and I mean, if you AMC, I mean, if you got a big short squeeze going on Wall Street, that's not moving today. I don't know if you have any comments on AMC, but I know there's CNK, which it had a nice move. It's pulled back. Are people going to the movies?
There have been some underwhelming results at the movies recently, and it hasn't been all that compelling. And I'd say, as an investor who has the opportunity to invest in everything moving in AI, everything moving in tech, it's just, it's a little bit more difficult to place your money there right now because you don't really see um, the movement you're hoping to see. Now, I had expected a decline in the third quarter, and the decline was not quite as hefty as I had modeled. Um, and so far, Q4 is relatively lackluster, but we have some big movies coming, and the content slate in 2026 looks pretty healthy. Um, e- I think the best positioned among anything related is IMAX because people are going to see IMAX films if you um, put combine your film with IMAX. You have more likely people are going to go see it, and they have the global footprint. They have um, a lot of global content, local language content, and all that's working for them really well. AMC has the biggest IMAX footprint. I think they are positioned with the Dolby screens as well to do quite well in 2026, especially after they get their shareholder meeting in December behind them. I think they're it's a little bit bumpy for them into year end. But yeah, next year looks pretty clear, free and clear for them. And, I
How's
don't
their
think they're
cash
gonna shoot to the
situation?
moon again or anything, but fundamentally, they're starting to look decent again. That's some
How's
good
the
stocks
cash
being.
situation now? They raised so much cash,
They did,
obviously, when the
yeah,
apes were all going crazy on it. Are
yeah.
they in okay situation, like from a cash position here still?
Better. Better
Better.
than they were, certainly. I wouldn't say they're in a good position, but they're certainly better than they were. And they can survive in a normal box office environment like we see coming in 2026. So they'll continue to chip away at that debt. But they don't need to issue the level of shares that they were issuing over the last few years. So,
Alicia,
I think they're
do you
doing better.
look at these like when you see these short squeezes happening? We'll just take you away from it for a second because obviously AMC was a vicious short squeeze.
Sure.
When it had the big moves up, GameStop. The story of yesterday. I don't know if you were following was Beyond Meat. And this stock it went from like 50 cents to $7 here in 2 days.
Yeah.
So this short squeeze theme is on again. Do you consider any of this stuff in your research, or this is just all like little short-term noise? And obviously not much to do with fundamentals. Although short interest can obviously be a fundamental catalyst as well. Do you look at stuff like this when you're covering these names and saying, hey, you know, this isn't that bad of a story and the short interest is really high and just maybe there's a story here?
Yeah, you know, I try to I try to look at it holistically, as you're saying. I think it's important to do so, because it can impact stocks for lengthier periods. It might not just be a blip, but I have to look at it fundamentally, and I have to price it fundamentally and say what I think it's worth, but also where I think it's going to go in the next year. My price targets are 1 year out, and they're usually based on where I think the earnings are going to go over the next 2-3 years. And so where that's going relative to where the stock is, I have to say, like with the AMC shooting, so high, that was eventually going to come back down to earth. I didn't know the time frame,
Yeah.
and I have to be clear about that. I have no idea when that was coming down, but
Yeah.
you price it and say, like, look, this has just gotten way out of hand relative to the fundamentals, relative to the debt level, relative to the underlying market on which the stock rests. This is a mature market. It's not going to, it exceed 20% growth. It's a low growth market, if anything. There's a recovery period after the pandemic, so it's always tricky. You have to look at it within the market and just look at it fundamentally.
One more from me, Dennis. I don't know if you ever know one either, but PLTK, Platika. Any comments? What's your research say about this issue?
Yeah, they've had some hiccups with some titles over the past, few quarters. They have some good new titles. I think they're positioned well as, more and more games start, getting people off the Apple platform, and they're able to, advertise to them directly, especially as the likes of AppLovin and Unity are um, you know delivering more e-commerce ads instead of competitor ads. They've been unusually resistant to showing ads for their competitors on their games. They don't want to lure their gamers away from the game that they're playing. So, having e-commerce ads instead of other games ads um, on their games has been, I think that will be a nice catalyst for them. They'll add more ads and make more money. So they have some opportunities, and if they kind of figure out what's going on with the games that aren't performing all that well, hopefully over the next couple quarters, I think there's some room for that stock to rise.
Okay. All right. We've been joined by Alicia Reese. She's a senior VP equity research at Wedbush Securities. Thanks a lot, Alicia. Talked about a
Thanks for
lot
your
of
time.
different stocks, and we'll keep an eye on these. Thanks again. We'll dial you up. Hopefully, we can get you on before the end of the year.
Sounds good.
All right.
Thanks, Alicia.
All right.
Chop,
Wow.
chop, chop.
Well, the S&Ps are just unbelievable here because, like we said, this market will not allow the S&P to go down. It rotates not out of Momo, it rotates into other things. We know we're seeing, Microsoft up $2 now, Google, which we haven't got to in a second. We should mention the news last night from Google, Amazon, because, there is some stuff besides earnings here too. And, earnings are great, but Google last night comes out. Yesterday, remember there was the OpenAI headline that hit the stock during the day. And then last night, we get a report coming out of Bloomberg, I believe it was, that Anthropic looks like is going to be investing in Google. And I don't have that in front of me, but so I'm really butchering it. But Anthropic talks about a Google Cloud deal potentially worth tens of billions of dollars. Google blasts off on this last night. Blast off. Central goes from 251 to 260 in, a couple minutes. Amazon, obviously cloud provider, the big one, goes down on this because they're obviously not getting the contract. We look this morning, that continues. Amazon's down $2.73. And obviously Google up substantially still. But this is just where we are in this market. We're at a market where if they're selling something, they're going to buy something else. So if you're looking and saying, why is my portfolio down 15%? and the S&Ps are flat. Well, if you're all full of Momo names, that's what you probably were saying in the last couple of days. If you're balanced, and a little bit of value, a little bit of growth, you're probably more mimicking the S&P. Like I looked at my long-term performance, which definitely, my long-term portfolio definitely underperforms all these retail traders when they're, loaded up and margined out on Oklo. But, it holds up very well during periods of market stress. So not market stress, but periods of stress and momentum names. So long story short is this market, S&Ps probably don't sell off with the Momo names. They are more linked, obviously, to the big mega cap 7. And that trade is still holding up fairly well.
Yeah, and if you got caught in that inter-day whoosh yesterday around 11:30, what I believe OpenAI is coming out with a new browser and no one's going to use Google anymore. Well, that just turned out to be quite the buy the dip opportunity. Here you are knocking on the door of the all-time high that was made on Monday at 257.88. You did exceed that in the pre-market, so keep an eye on that. Actually, after hours, I stand corrected. And the all-time closing high at 257.02. So buy the dip in Google wins again.
Buy the dip seems to always win. Is it going to win in these Momo names, though? Like, do you think, Joel, that, and there is definitely a possibility that names like Oklo, names like IONQ, names like Rigetti or GTI get hot again? Like, it's inevitable that they're going to get hot again at a certain point in time. How do you and, I know the way I do it. Like, I wait for stabilization and then, look for a little bit of strength starting to come back in. I don't try to catch the falling knife. But there are traders that come here just flat out catch a falling knife and sometimes get lucky. I mean, you can throw a knife in the air and sometimes you catch it and don't cut yourself. So I'm just too ultra cautious probably. But what's Joel Elconin's method?
No, man.
You're looking at the 50-day, the 200-day retracements. I see you doing some retracements.
I do the 50%. I mean,
not a bad play.
I'll just go with the simple fact that every move has a counter move, right? And a lot of times a big move up is met with a big move down, right? And so you got the 50% retracement here at 59.50. And a stock like this, you got to give it a zone. So 56.73 is the 50-day. The 50% is right. So if it actually could stabilize here, Dennis, and then I'll just take one out of your book. Let's say you just get a couple days of just nothing and a couple days of consolidation. The volume comes down a little bit. Everyone that got caught is sold and they're out. And then you'll just get a little relief pop. And then can it get back to the double top at 65? Can it retrace half of this move? So I'd use the combination of the 50% retracement, see if that comes in with your 50-day moving average, and then let it calm down a little bit and see if you got the sellers out. But these are, I wasn't great on these things on the way up, and I'm not going to be a hero on these things on the way down. I mean, the valuations, the momentum, sleeping at night owning these things. I mean, there's just a lot of different factors here. But the bottom line is that some of the smartest people in the world, Jensen Wong, all these people are saying, whatever, quantum, all the stuff is years away, 5 years away, 10 years away. So if you feel like you need to invest now and you're willing to ride it out for that 5-10 year period, then maybe you are getting a discount in these stocks.
All right, folks, I want to wrap the show here by giving a word from our wonderful sponsor, Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. Bottom right corner of the screen right now is a QR code. You can scan that to learn more about Hive. You can also click into the description of this YouTube video. There's a little link in there where you can learn more about Hive. Thanks again to Hive Digital.
Okay, let's wrap it up. And it's a choppy day, folks, but keep your eye on the big boys. The big boys been holding us up, and until someone decides to shoot the generals here, let's grind higher. Let's make that new all-time high.
And I think the short squeeze trade could still be on. We are seeing some momentum pick up in BYND. We are seeing some momentum pick up in some of these other names here. So, we're going to go trade some of these over in the STN room there. I know some people were talking about GoPro there too. I did take a little position in GoPro as well. It's starting to show some life. I think there's the potential for some of these short squeezes to spread. So, let's go talk them over in Stock Trader Network.